my real passion has been in the single family space. I chose it for my funds because it's an asset class I've invested in for a long time, and I've found a lot of success with it, and just the ability to be creative, the ability to look at a deal and figure out different ways to structure it to make it very profitable. I'm Taylor Vick, and this is the Real Estate Fund Insider, pulling back the curtain on how to grow wealth and passive income through real estate investment funds. However, for a long time, or at least for guys of my size, it was hard to do it at a fund level because the infrastructure wasn't there, the economies of scale weren't there. But with a lot of the change in technology and with a lot of large institutional buyers, realizing how profitable this niche can be, and also being able to utilize technology that can help with some of the previous problems that exist with economies of scale. So for instance, if you have an apartment complex, you can have one person on site manage the whole thing. Management's relatively easy. But with single family homes, if they're all over town, it becomes very expensive and cumbersome to manage them. A lot of the technology we're utilizing now, like smart locks, they allow us to unlock doors at any time. There's no key exchanges, lost keys, lockouts, things like that. There's a lot of different things we're doing technologically that is allowing us to make the management much more efficient. So the advantages and disadvantages of the single family residential funds, especially versus commercial funds, there's a few things to know. One is with commercial funds, we are often able to deploy a lot of capital at once. That is because the purchases are much larger and it's done as one purchase. With single family, sometimes we're buying one house, sometimes we may be buying 10 together, or we may be buying 30 together. But even if it is 30 together and it's a $3 million purchase versus a $200,000 purchase, we've got, 65 bedrooms we have to inspect. We've got 50 bathrooms, 50 toilets, 50 showers. All these things require a lot of work to inspect. So as far as deploying capital, the way in which the capital is deployed is not quite as predictable even, and not quite as steady. Capital is deployed over time, so investors need to be ready to have their capital called down. Now, if someone has $1 million and they want it to get to work within 3 months, it may make more sense to invest in a commercial fund where we can do that. Another advantage of the commercial funds versus this current single family fund, and really all the ones we're going to do, a lot of the commercial stuff is already existing and cash flowing. So you invest your money and then the next month you get a check. The commercial are a very steady cash flow, very predictable cash flow. Where the single family, we are buying things and we are fixing them up. We're making them better to have higher cash flows over time. But there's a long period of time where we are either building something or we're rehabbing something. So there's a period of time with no cash flow back to the investor. One of the great advantages, though, is that we're taking things and making them more valuable. Therefore, when we sell them, we make a lot more money than we do with the commercial funds. With the commercial funds, you get kind of the cash flow early on and very steadily, and then you sell it and you make some extra money. You make good money. But with the residential, we buy it, we're investing a lot into it, we're getting it leased up, we're rehabbing it, we're fixing it up, and then the rents come. And really, the value there is that when an institutional investor comes to buy it, they're not having to do all the work we did. They're not having to go find all these homes or duplexes or whatever the asset is. They're not having to fix them. They're not having to stabilize them. They kind of get to be that guy that writes one big check and starts making money the next month. And they're willing to pay a premium in order to do that. So, great advantage of the single family fund is that ability to really capture some extra value and make a lot more money. Typical residential lease is a year. And when you have as many as we do, that means you have a lease that's maturing every month. So especially with what we're seeing in the market now, just all the markets with inflation, we're able to adjust leases. Where in commercial, you may even have a 20-year lease or a 10 or 15-year lease, and it may or may not have rent increases. So residential really allows you the flexibility to increase rents as the market increases. The reason historically you haven't seen a lot of single family funds, and really still don't, is because they are more difficult to curate and to make profitable. So historically, if you were going to put a lot of money to work and you wanted to do residential, you would do multifamily. You've got everything under one roof, so to speak. You've got on-site management. There's a lot of efficiencies built into apartments, and it's one structure. So it's one asset, one loan, one check at closing, and then management all put together. So what that allowed me to do, and other smaller investors, is to invest in single family because the big guys weren't looking at it, and we saw all the great advantages there. So they were less in demand, so pricing was better. As I've continued to invest in this asset class, technology has come a long way. So a lot of those things that were very difficult before, for instance, keys. If a resident wants to look at a property, they have to come check out a key, or we have to bring a key to them, or a maintenance person, they will have to come get a key. Now that we have things like smart locks, we can give our contractors a code that works for 1 hour that's approved by the resident to let them in so that they can, get the work done, and we don't lose a lot of time and money running around town and not being able to get in. Also, with things like video phones and cameras, we're able to do inspections remotely. So we can even have our residents, when they do a move-in inspection, we do it together with them over video, where in the past we would have to either A, count on them to report it, or B, we would have to go out there and inspect it ourselves, and then you're driving all over town. Things like that save a lot of time and allow us to stay in one central place. So that has really driven the popularity of these investments. Another thing is a trend in U.S. housing, which is more people are preferring to rent than to own. And there has been a lot of demand for rental houses, especially higher end rental houses as well. So there's market demand for the product. The previous inefficiencies are getting smaller and smaller. And I think just a lot of people are really realizing how great these assets are. And when I say people, institutions, the big players are finally starting to get into this. I get the question all the time of how are we finding these SFR properties? So it's one of the hardest parts of the business, and especially in SFR where each deal is so important. There's a lot of different strategies to finding them. And a lot of times when we tell people how we find them, they don't like the answer because it's not easy, and it's just not an easy thing. A lot of people want to be able to go on the computer and find things, or tied up in a bow for them, but that's the beauty and the difficulty of this asset class is every deal is unique and every deal can be found a different way. So we're finding SFR investments largely through relationships. So a lot of the owners of these investment properties are older, retired people who have been, buying these up slowly over their lifetime or at retirement. And you really have to meet them where they are. People ask me, Taylor, how can I do what you do as far as finding deals? And I say, well, first off, you have to know Mr. Rogers for 10 years, and then you have to meet him in the vestibule of church when he's walking from choir practice to lead RAs. It's not just something you can pick up and do. It's highly, highly relationship focused. So a lot of our sourcing is coming through relationships that I've had or my teammates or partners have had for years. And just really working on those and working the deal so that it works for everybody. There's several strategies that we use to find SFR outside of pure relationship plays. A lot of that has to do with direct marketing. So mailing postcards or letters directly to residences. We'll target an area where we want to be and we'll send a personalized letter to them. Phone calls as well. Even texting sometimes can be a better option. So just a lot of different strategies. And, what I tell people is, find a deal in my portfolio and I'll tell you how I found it. And it's going to be different every time. I mean, Facebook, Craigslist, someone just walks into my office saying, I've got a friend who has this thing. You just never know where you're going to find these deals. So just having infinite tenacity, always being looking for things, letting people know what we're doing, building off the relationships we have, and just really marketing very hard directly to homeowners and to investment real estate owners is how these deals are being found. So Blue Ridge is the expert in this asset class in upstate South Carolina for a lot of different reasons. But one is I'm just kind of obsessed with it, and I don't really know why. I just always have been. When I was a kid, like 6 or 7, I remember asking my mom, what is that house that has two doors? She was telling me, well, it's a duplex and two families live in it. And to me, I just thought that was really cool. It's kind of fascinating. And I've always been, very fascinated with this asset class. And when I got into investing, it seemed to be, the best thing I could find just from purely the returns perspective, but it's also just fun for me. I mean, talking to the owners, talking to the tenants, taking something that is good and making it better, or taking something that is bad and making it good. It's very, very rewarding, and to me, it's just purely fun. Some other things is we've invested heavily in technology. I talk to guys who have investment funds that are way bigger than mine, and they are not even familiar with all the technology that we're using. So being a small player, we realized one of the best ways that we can outperform is to have the best technology. So we've invested heavily in technology. We have a lot of automation. We work with a lot of vendors, and we're kind of on the leading edge of what's called prop tech, or property technology, in this asset class, which again is something that really inspired me to start the fund. Is now we have this technology that allows us to build this to an institutional level. We also have just a tenacity. All of my employees are very unique, very highly skilled, and really just have a desire to do things well and to do things better than anyone else can. And we're just not going to let anyone do better than us. That's just kind of our personality. We've also taken a big look at systems and putting systems in place. So just like the technological investments, we understand that having operational investments is hugely important too, so that we can operate in the most efficient manner possible. I think it's also unique that we're doing this with this asset class, because most people who are willing to put in that kind of investment in technology and operations and employees are looking at bigger assets like the multifamily, like commercial, which of course we do as well, but to really take all of the world-class institutional level operations and technology to single family is a very unique proposition, and we're really the only ones doing that, and it really makes us stand out as the best in the upstate for this asset class.